All right. Hey, how's it going, guys? Welcome back to the MentFX private mentorship. This is webinar 155, luckily, because we were able to recover over this entire long week. This one right here. So as a lot of you might know, I'll kind of make it quick. This webinar was lost since like last Sunday, and then I was able to recover it very, very recently, and I just got it available to everyone. So hopefully a lot of you are able to catch it, check it out, and see firsthand why I really wanted to get this out, because there's a ton of really important info that I was able to drop in this one, and I sadly was gonna lose it, but now it's back, which is amazing because a lot of you that do get to see it are going to be able to get a lot from it, right? Now today, I just want to jump right into it. I'm just gonna go start off with the chat instantly. As always, I'll preface this, right? Everything we share is from a simulated environment only, is my personal perspective, is by no means is me telling you what to do or financial advice or anything like that, right? Of course. Now, if you're brand new, the first thing I want to do is I want to welcome you. So welcome to the team. You made a very, very good choice to be part of this team and to join up with it. There's a lot of stuff, as you guys know, but showing up to these webinars, especially the most recent ones, is a phenomenal first step and will aid you in a huge way going forward. And you're going to, over the next few months, catch up and be in a spot where you also understand everything we're doing. So you're in a great spot for that, and you're going to have amazing people around you that are going to also push you. And yeah, that's just what comes with it. So yeah, let's just get right into it. As always, questions are welcome. Q&A is welcome. I had a few things I wanted to talk about today, so we'll get to those in a second. And that is it. Welcome to the webinar, guys. So let's get into it. Good morning to you, Jimmy. What's up, Dante? Happy to have you here, man. Joel, Hearn, Onions, Emilis, Ole, Hearn. Good morning, everyone. Dan, Kevin. Yeah, a lot of familiar names. Really great to see you all here. Need some sauce with my Sunday dinner. Yeah, as always, guys, showing up to these, whether you're brand new or have been here for a while, is always a smart and the right thing to do, because we get to do a little breakdown of the prior week. We get to delve deeper into some concepts that might be a little bit misunderstood by some, or give you just another way to think about something that completely might change the way that you approach your testing this given month, this upcoming week, whatever it might be. So it's very good that you show up. And as I love to say, if you just watch the most recent 10 to 20 webinars, oftentimes you'll get close to everything and see everything that we do, how we use the tools here. And yeah. Good morning, Sarath. What's up, man? Shelling this. Yeah, good to see everyone here. If I skip your name, just know it's not because I hate you or anything. What's with the webcam backwards? It's not. I changed the layout of the entire office. I moved stuff around, so now I have a lot more space. Yeah, that's really it. That's all that happened. So I have a ton more space, the new little layout here. It'll take time to adapt to changes. You'll be all right. John, yeah, I'm aware of this. That's what I'm doing. That is what I'm doing. Anton plays Among Us. You know, on the off day for sure. Okay, so let's get into it. There's a few things I saw this week. You know, there's a ton of stuff that occurs all the time in Trade Talk and whatnot, and there's extremely helpful things. I only see a few of them, and then I try to record some of them in terms of like what's going on. Why does it come off for me? Want to see the new room layout? It should be on. Look in Zoom. You should be able to pin it or whatever, right? How can you live with the desktop this filled? I don't go on my desktop, bro. So. A few things occurred this week. Let's start with stuff that actually had occurred this week. So this was on Sunday. We can start there and then work from there. Yeah, let's just do it. So somebody asked something. Oh, okay. I remember talking about this a little bit, and I think this could be very helpful for almost anybody with any background. But one of our members asked us. Actually, I think I went over this last week, right? I think I did. Okay, I'm gonna skip that. Yeah, I did. Okay, cool. You guys know. Okay, so there's just only two things I want to touch on that I recorded from yesterday, but the first thing was a really cool test, and actually, this member is actually in the call right now from Sapir. Sepper, I don't know how to say the name. but he did a test which confirmed a lot of the things that I already know about my system, that I already understand about trends, but also showed firsthand how vital it is to do this work. So again, we're gonna talk about it for a second. So Sapir right here, he was doing a study of like kind of shittier context versus good context. Now, for anyone that's new, what does that actually mean? The market itself, any asset class you look at, anything you really look at, right, has a context behind it. The context is very simply defined as how has money in the moment entered this given market over X amount of time, right? So based on the timeframes you're kind of trading, based on the template that you have over the timeframes you look at, the context will be defined through multiple things aligning. And the thing that this member did is he wanted to test what actually happens when you have what you might call a shittier context versus a good context. So to give you a very easy way to view this before I even do anything, right? If we use the MentFX screener, which all of you have access to, and we take a look at this, a lot of you know that for a while, we've seen a lot of XXX JPY pairs show up on the very bullish side. Now again, seeing something show up bullish or seeing something show you bullishness does not mean necessarily that I'm buying it. As a lot of you know, even though a lot of the XXX JPY pairs have been showing to be very bullish, I haven't traded them because they are not in the action that I personally like to take trades on, right? So there's still other elements of context that go beyond just a simple like look at the greens. But as a lot of you know, for the most part, we've been following NASDAQ, some of the metals, a lot of the cryptos, right? Bitcoin specifically, and those have created very, very good deliveries, right? I actually have Bitcoin brought up on my chart here. This is GBTC, or we can simply go to Bitcoin USD. I don't really care. It's just a question of where do you trade it. But as a lot of you know, when you look at this, right, and I asked you, let's consider that the MentFX screener, the models, whatever you want to call them, had been showing very, very bullish action since around here. Okay, now if I ask you the question of if I threw on, let's actually do it like this. We'll go one, let's just do this. And we'll look for a payoff that is higher than the stop. Okay, so I'm just randomizing this. 2, 3. So there we go. 3 trades in one direction. If I now get rid of everything from this arrow, so what I'm just gonna simply do is I'm gonna hide this, and I'm simply going to hide this. Okay, if I do this since the arrow, and I place these anywhere after the arrow, do you think that even over 3 trades, one could be a runner, or one could hit, or one could make you money or win, right? Yes or no, is where we're gonna kind of start with this. The answer, funny enough, is yes, right? When you've done the work prior to identify that a market has a good context, is moving quite clearly, is structurally delivering bullish, has the ability to make clear stage 1s and 2s, and wants to move higher, maybe wants to surf above the moving averages, and at the same time has already proven to you through the screener that it wants to be extremely bullish, right? Almost no matter where you throw an entry, as long as you have good management practice, you will, for the most part, find yourself making money, which is a crazy thing to consider. So if I just threw an entry, so if we just think about this, let's say one of the entries, all we have to do is above this. Let's say an entry was here, let's say an entry was here, and let's say an entry was here. So all I'm gonna do is I'm now gonna bring back the actual price action, right? So all I have to do is just throw this back, and I will find and line this up with the actual entry, right? So go like this, and go, right? So if I just line this up, this would be where the entry is, this would be where the entry is, and this would be where the entry is. So all I'm doing is I'm lining up the entry with the red lines. Now notice something interesting. Funny enough, all 3 of these trades, without ever returning to break even before delivered and actually made you money. I didn't expect this to happen. I expected some of them not to make money, but if we move them like something like this, right? This would lose, that would be a loser, that would be a winner, this would be a winner. Or if I move this a little bit more, that could now be a loser, loser, winner. But overall, has money been made even with this kind of, let's say, testing or this kind of data? Yeah, it has, because of this one, right? Or just like I just did, where I drew 3 random lines on a well-delivering market, right? Or a market that we suppose would deliver well, that's exactly what happens, right? Which is a really cool thing, because this is the first time that you start to see that context in the market is much more important than anything else, right? And notice how I haven't even considered an entry or a reason for an entry or a specific criteria for confirmation. All I've done is said, hey, this market is likely bullish, right? Similarly, I could do this in a number of things. So if I, okay, I can't do it here, but I've been trading a few stocks, as you guys know. NVIDIA is one of the things I've traded. So if I, again, I'll just head over to NVIDIA first. I don't want to get rid of my stuff. Actually, I'll get rid of it. It's fine. I don't care. So again, since around, like, back here, back when the market was already proven to be bullish, we became relatively bullish on this thing, especially because across, like, NASDAQ, it was showing a lot of strength. So this was a very bullish market. Everything was showcasing bullishness. And just to kind of show you that, right, this thing has remained above a 200, has sailed higher and higher on the daily, even on a lower time frame, whatever you want to call it. And similarly, right, if I want to just delete everything and assume that at the time of trading this, it had a very clear, you know, maybe we can go like where it's already proven that it's made very bullish moves or a little bit before, however you want to do this. So let's just say kind of this price here. So around there, the context of it would have started to line up very bullish, or you could even wait till later. Let's just say you really waited for this to show that it's super, super, super bullish, right? And then we can hide everything else. Now, again, without any entry criteria, without scaling down a time frame, without anything else other than the fact that, let's say, the screener at the time, which, you know, does not contain NVIDIA yet, because I'm adding it at the moment, or we're working on adding it. But let's just assume that it was very, very green for a second. So the context is somewhat there, and then you analyze it and you look at it, and again, it's meeting those same criteria as we saw Bitcoin move with. If I, again, did something like this, we'll even use a bigger stop this time, right? And we'll just look for like a 1 to 4, something like that. Maybe that's your system, okay? Now, again, if I just spread out where I may be buying due to the fact that it's contextually bullish, so let's say I buy here, let's say I buy again here, let's say I buy again here, let's say I buy again here, right? Something like this. Actually, yeah, whatever, I don't care. Then again, let's go like this. Then again, just with the fact that we have a bullish context, right, and we line these up with the actual times the entries would have been taken there, and now this one hasn't even been taken yet, right? So something like this. So this could be the setups that you have without even looking at anything else, right? Is this system already proving, just based on what we have right now, to have some form of EV or profitability? Okay, so yeah, these are very easy answers. And now, just to kind of cement this main point, are the profitable trades or the positive EV being created because of some special entry criteria or some brand new algorithm or some really cool order flow based entry or some really special moving average based crossover or some very special MB based buy stop? Is the reason that we're making money on this specific pair or on Bitcoin coming because of the entry, or is it coming because we've identified a market that is likely to trend and deliver? Right? Yep, exactly. We've identified a market that's trending, that's delivering, that's proving to deliver, so we can assume, for the most part, if we just threw a dart at that market, we can maybe make money, which is a very, very powerful understanding to switch to, because all of a sudden, you stop worrying as much about, but is my entry criteria good enough? Is my double MB going to make money? Am I going to make money if I buy stop the ICI? Or if price comes to the 50 EMA and I buy, what's going to happen? Instead of worrying so much about the entry, why don't we get very used to what creates a bullish criteria or a very bullish market, right? As our final example, right, if we go to UJ, something that has, as we all know, showcased that same extreme bullishness for a very long time since, if you all remember, since around right here. And if we wanted to, we could have waited for it to show even more bullishness. So we can draw an arrow here, right? And again, we'll draw the line so we know where it is. And then we'll simply hide everything one more time. I think I just double click, yes. Nice. Right, and again, if we just draw out like a general, I don't know, what do you guys want? Smaller stop loss or larger stop loss? It doesn't matter, right? Small. Okay, someone said smaller first, so I'll do smaller. So smaller stop, and we'll go for a higher R-based system. So maybe like 5. Just make it really simple. And again, we randomize the areas within which we enter. So let's say we enter one here. 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 Just like the most simplest pyramid you can almost imagine, right? Okay, great. Actually, I don't know where this would be. So now we'll unhide everything. Okay, and we'll take this off. Now again, it's not a guarantee. So this first entry would be back here, right? So you can see you'd get tapped in and you'd probably break even. Okay, so we have one break even. Again, the next one would be there. This one would be an easy win, right? Instantly breaks even and then goes. This one would be the next entry up here. This one looks like it'd be either a break even or, yeah, it'd be a break even no matter what. Then you have this entry here that would have been an instant loss. And then you have this entry here that also would have been an instant loss. So without even looking at this leg, without even looking at this next leg here, because again, if we entered these same trades at kind of those same prices, do you guys think we'd make money or lose money overall if we entered in this leg the same way as we just did here? We would make money, right? So let's ignore that leg for a second. And again, take a look at the results of just looking at something that was contextually bullish and has been proven to be bullish for a very long time, right? Look what happens. You take a trade, it ends up going in profit and breaks even. You make nothing. You take this trade, it ends up going in profit, you move to break even, and it delivers. That's +5. Next trade, you... Oops. Oh wait, this one would actually be entered here. Let's be honest about it. So this one would have been either break even or a loss. It's up to you. I would say this is very likely a break even. Oh wait, sorry, that's the... Oh, this one would have actually been a break even, not a winner. So let's get rid of the +5. Sorry. So I want to be as honest as we can be with this price action, right? Then this one would have actually been entered here, and that actually would have been a loss. There we go. This one also would have been a loss, and this one would have been a loss, right? Beautiful. Okay, cool. So again, I just want to also show that even if we have an extremely good context, it also doesn't mean we guarantee making money, which is one of the reasons, as a lot of you know, I've worked on perfecting the kind of areas I want to consider an entry in, or like an entry criteria. But that said, if you prorate this thing further out, so after this happens and it flushes out, and you again set up the same kind of buying areas, right, then you have the example of the one that gives you the +5. Another example of one that gives you actually nothing. Another one, yeah, so then there's no further example until it flushes out again, and then you can repeat it again, right? You can repeat it again at a few areas higher and higher. Some of them, like these two, I think would win. This one would break even. This one would lose or break even, and this one would win, right? And then again, overall, you'd be up 15, 14, 13, 12, maybe 11, 10, 9. So you'd be up over 9 RR on this leg alone by randomly throwing a dart kind of stacked away from each other. So you give price a second to like accumulator to come into an entry, and you can still have a positive EV out of it. And the reason I kind of wanted to start today by doing this mini little thing is, again, to define the fact that the thing that makes us profitable is not the entry. The entry is important, and we can study it, and we can get better at it, and we can find better areas to enter where we can make more money, less downside risk, maybe manage ourselves better, and then see the upside potential. But the things that are deciding what markets we do this on are, as you guys know, the context. And then again, if we took a shittier context, again, something like Euro US dollar, I don't even know how the fuck we would do this one because I don't even know what side we're moving to, but this is exactly where most traders go wrong, right? What do you guys notice that I did just now on all the markets that we just looked at as an example? What was one consistent thing that happened? The screener, yes. But most importantly, when I placed entries, what was consistent in regards to the entries? Perfect. Hearn got it right on at down as well. Yeah, bull, exactly. The market was already trending. We had a directional reason and a directional like order reason, because we understand how orders are entering the market. That's what this is basically showing you. So we had a directional reason to place it in one direction. Now, what do we know about most of the trading space? What is everybody on Instagram, on the YouTubes of the world doing? And what are they trying to figure out to do? Not just pattern entry, but kind of like John said, they want to be traders in the sense that they want to take trades all day. That's number one, which means they want to trade at all times, which also means what? They will be bullish and bearish back and forth all day long, which means they're not looking for a trend where they can maybe get in at other points. They're looking for, let me take a buy here. If it fails, let me try take a sell here. Let me try take another sell, maybe then a new buy, then a sell, maybe a buy. So each individual trade is not just a buy, or a directional based trade, or a directional based idea, or an idea based on the orders that are entering the market, each individual trade is actually based on, hey, can I try predict the next move? Hey, can I get long or short on this at any given point? Can I get in on both sides? Where's the high? Where's the low? So all of a sudden, when we bring back the actual market, right, they're executing a buy or a sell here. 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 And no matter how you kind of put it, all of a sudden they're caught in this nonsense chop because there's no defined direction, there's no defined reason for the trade, there's no defined understanding of how money is actually entering the market. There's just basically emotional based speculation. And a lot of traders are stuck in emotional based what I just call speculation, where everything they do is based on an emotion of the market at any given moment because they really want to get the trade, or they want to really just get into a trade because all day, all they do is take trades, because in their mind, being a trader means taking trades. Which brings me to a very, very vital point that I saw brought up by one of our members this week. I'm going to go back to Sapir's thing in a second, but it was right here. And this was so beautiful. From Mr. Onions. So Mr. Onions, what's up, man? I think you're here. This is his review of his May month. And he basically said for the first time, he had an actual profitable month. So first of all, congratulations. That is a huge feat. A lot of people don't even get to breaking even before they quit. So phenomenal job. Now, this is what I absolutely loved. What's up, Onions? Yeah, I know you're here, man. This is what I loved, and this goes hand in hand with what we just kind of discussed here, especially hand in hand with what we just discussed with trending-based markets. Don't really care what went well. This is what I loved. What needs to be worked on? This is all good, just kind of being more patient, but this last point right here brought tears to my eyes. And he said what needs to be worked on is reducing the amount of trades he takes. Now, this sounds like kind of nothing. It sounds like fluff almost, but this is fucking huge because we are all taught, especially in the beginning, that we need to trade. We need to predict. We need to get in at the highs, at the lows, in the middle, in the chop, in the range. We need to not only identify if we're trending or ranging, but once we've identified, what do we do once we identify if we're trending or ranging? We need to apply the system that lets us make money in a trend if it's trending, or apply the system that lets us make money when it's in a range. That's how all of the online trading education works, right? It's, guys, if we're in a range and you've determined you're in a range, you need to trade the sells up here and the buys down here. If you're in a trend, you need to trade the trend, of course. Because again, a lot of the information out there is riddled with, we need to be in the market because that's what makes money, even though it's not. So this brought tears to my eyes because this is a huge realization to have. Because what this inherently means is that he knows and understands that he would have made maybe 5RR more, 4RR more, or higher if he simply didn't take as many opportunities as were made available. Right, so think about what's happening there. He's saying, if I actually didn't take these, the equity curve would have been higher. That understanding is paramount to your trading, right? Because all of a sudden, what he's really saying is, I'm going to reduce the times where I would have taken something like this. I'm going to reduce the times where I would have taken the trades in here, and instead, I might just take the trade here or here and keep going. Yep, thank you for that. So this goes directly into the idea of, yes, like Ole said, waiting for a better setup or waiting for your actual opportunity, right? So this was an amazing thing to see, because what this shows me is that there's a member that basically saw for himself, and he even wrote it here, it would have been +6 or 7 instead of 3.5 if he simply stayed out more, which, as we know, goes exactly against what the entire trading space teaches, right? The entire trading space is don't think about the trend, just figure out what is price doing, and then take the next available trade, take the next available pattern, take it to either direction. Get on, figure out your 9:30 a.m. zone, and fucking snipe it. You need to snipe that imbalance or whatever it might be, right? It goes completely against it. Because instead, he's now saying, when I show up, I'm almost looking for reasons not to take something unless it's just asking me to make money on it, right? Which is a way that is a really good way to think about trading. I kind of said this before, but you want to look for the reasons not to take the trade, right? Like, you want to show up somewhere where basically thousands, millions of other traders or people in the world are like, please, like, I need this to go up. I'm just throwing money at it. And you look at it and you're going, holy shit, this thing just wants to go. You know, when we were looking at Bitcoin back like here, all we're thinking is, holy shit, someone's just accumulated this. Someone's holding onto these positions. Someone's just shoveling money into this. It wants to go. So I can do nothing as a trader other than go, listen, I don't want to trade, but if you're going to give me free money, I may as well take the opportunity. Now, again, it's by no means free money, quote unquote. It's by no means only wins. Of course not. You guys know that, you know, I take infinite losses, infinite break evens. But the thought process is that of, you know, why should I trade something that's not clear? So this is kind of the thing where people keep asking me about like EU right now. Why would I sit here and try to determine the next move on this when the MAs are proving to be choppy, the market's proven to be choppy, the market's proven to kind of be stuck, it's in distribution, but it's above the MAs, right? Why would I trade a market and like it's just kind of sporadic? Why would I sit here and be like, the next candle is gonna take out this low, maybe this high. Okay, maybe I'll look at a lower. Okay, it's maybe bullish, so maybe tomorrow it can go up. Fuck, right? I'm not interested in that. I'm significantly more interested in saying, okay, is there a defined trend by which this market is like screaming that it wants to go? Is there a defined trend that the market I'm looking at on the given time frame I'm trading is just saying, listen, you know, you can take a really low risk entry on me, you can take a loss or two and then move away from me forever, or I'm gonna go. Welcome to Bitcoin, right? This is kind of the thing that I'm gonna be trading this thing this week. This looks phenomenal. I would love to get into this upcoming week. You know, hopefully start of the week we get like some of that move, and then, you know, I'll be in this thing. I'll be looking for this. I'll be looking to trade it again, over and over and over again. Because right now it's showing me that money's coming into it in such a way that I can protect my downside in a very simple way and see infinite upside, which is huge. Christian says, if he made 20 trades, so he's talking specifically about onions here. If he made 20 trades because 5 worst minus ones he did not take, it's 8.5 R inside of 3.5 R, which is already a great result. Exactly, right? So funny enough, the better you get, the much less you choose to actually trade, the much less opportunities you choose to get into, the much more you start looking for opportunities that really just create a positive potential, and then just enter those, which is a phenomenal way to do it. And kind of going back for 1 second to the context idea, right? Back to this where he said, listen, you know, I've been testing my system in a bad or a meh versus a very good context. I tested it on NASDAQ, on GBP, JPY, on Google, Bank of America, I think. I don't remember. And here's what he found for himself at the moment of what good context is. Price is in a confirmed accumulation or reaccumulation, at least for the context time frame. And again, for anyone that's new, the way we think about time frames, and this will be part of the mastery section, which I'm working on right now, is what we call EVC. So if you enter, let's say, on a 10-minute chart, you simply apply a rule of 6 for the validation, which would be 60 minutes or an hour, okay? And you apply a rule of 60, 60x, okay, to get the context time frame. So this would be 600 minutes, which is equivalent to about 10 hours, okay? Or you could just use it daily. So what he's saying is that on the 10-hour chart or on the context time frame, EVC, what he wants to see are these things. You want to see that price is confirming reaccumulation or accumulation. which lines up exactly with something like this, where on his given time frame, let's say like the 12-hour, he sees that it's fully confirmed accumulation or reaccumulation, right? He wants to see that the candle after which the trade was taken is above basically all the EMAs. So he's noticed that his best trades are happening when price is above all the EMAs. All this means is that, for instance, if I'm trading Bitcoin, which I am, and my context time frame is like a weekly or a daily, price should be above all the EMAs. Now let me ask you a question. This is my context time frame. Is this currently in a good environment based on his rules to be taking trades on a lower time frame? Yep, this is phenomenal. Price is above all the EMAs. Now again, for me here it says it's an unconfirmed redistribution, but again, this is where I actually don't know why it says it's a redistribution, to be honest. This looks like straight accumulation to me, so this thing's bugging out or something. But nonetheless, this is confirmed accumulation for me. So this is an area where I'm more than happy to watch for this move, okay? Because I want to see this keep going, especially as it took out this high already, you know, so structurally it's already moving bullish as fuck, which is amazing. Nonetheless, let's go back here. The current range is short and very clean. I would call this short just because of the fact that we keep making highs, which means that the most recent range basically starts from here and does go to this low, but it's been short term. So the likelihood is that it keeps going. If I go back and show you examples of prior runs on Bitcoin, what you'll notice is the ranges, when markets go, are relatively short, right? Price moves higher. Doesn't spend a long time, price moves higher. Doesn't spend a long time, price moves higher. Spends quite a while, so you might wait a bit. Starts going, as it starts being above all these MAs and near the highs, it just goes. The ranges are short term, they're short lived. They want to deliver. Then it goes into a longer range, so you ignore it. You ignore it, you ignore it. Back above all the MAs, shorter term ranges, it should be bullish now. From a very simple perspective of the ranges are quicker and they're bullish, so it should keep delivering now. Short ranges, keep expecting longs. Breaks down, we wait. We wait. Above the MAs, breaks the highs, likely accumulation. What do? We return to being very bullish. And we take things as long as this maintains, in this case, just short-term ranges. Short-term range, keeps going. Short-term ranges, keeps going. Short-term ranges, keeps going. Short-term ranges, keeps going. Still a short-term range, we could still keep going. Keep going, short-term range, keep going. Breaks down, longer-term range, ignore. Breaks higher, new short-term ranges, keep looking for longs. Short-term range, keep looking for longs. Short-term range, keep looking for longs. Short-term range, still keep looking for longs. Just based on those criteria alone, fails down, we ignore. Back into potential accumulation. Maybe even wait for the 200 to make it simple. Let's see. There it is. If this makes it a short-term range, which it is right now, should I be looking at a lower time frame now to start looking long on this given pair at this given moment, based on the rules that we've just seen laid out by Sapir right here? The answer is yeah. The context time frame is above the MAs, the range is relatively short, and it's an accumulation. It should deliver. It delivers, and now we're here. And that's money made, because this is opportunity on a lower time frame, right? Very, very simple. And then some elements of meh context, or context that's not as good. So he also tested this on shittier context. And shittier context for him was that price was, let's say, under 200 EMA recently. So that's where he traded in areas like this. Now again, if you start trading in an area that just undercut, you're going to take more losses because these might be nice accumulations on a lower time frame, then it fails down. These might be nice accumulations on a lower time frame, then it fails down. Same thing, and then maybe it starts working, right? But if you just waited for the better context, the trades became a lot easier and a lot cleaner, okay? And now all I'm going to do is I'm going to show what he found. This was when he traded during the shittier context, right? Prices, you know, he kind of makes money, loses money, makes money, loses money, makes some money. But most importantly, what he said is that it was only because of this little trade here, this big runner here, that this ended up not being a losing or break-even meh context. Because without this guy right here, this is going to be at 0 or below. And do any of you, as you look at this, notice any big difference when he went into good context? I mean, it's as apparent as ever, right? There were much less random big moves, right? Just random. There were much less continuous break-evens or losses, or continuously getting something wrong. Very short-lived, and then deliver. Almost like a quick stage 1 and stage 2. Stage 1 and stage 2, new impulse, new impulse. And what's funny is, I'm going to ask another question. Do you think that this kind of move right here could have also happened during a time like this? Of course it could have. It usually does. Right? This is why we record more data, because someone that just sees this happen in a bad context is going to do what in the future now? They're going to attribute the money they make to trading anything and to trading bad contexts. And as a result, they start forcing, just like John said, they start forcing trades anywhere and everywhere. And then you get to the 90% problem where everyone wants to trade everything at any time, or is extremely attached to one market and thinks that they must continue trading that market if they want to make money. Right? That's not how trading works, though. Trading inherently means that something, somewhere at some point, is being valued. Right? That if you really think about what trading is as an overall thing, trading is when something is valued in such a way that all of a sudden mass psychology or hysteria or just the want or demand or supply of that good starts to see a clear trend, right? And now if you're trading something that's somewhat demanded, but not clearly, if you're trading something that's somewhat demanded, somewhat supplied, not hot in the moment, it doesn't have a backbone as to where it wants to go, well, you're going to lose a lot of money. If you trade something, somebody asked me about this last week. If you trade something that hasn't proved that it wants to do something, that is continuously back and forthing, that is continuously being supplied and demanded, but does not have an inherent value that makes it go in one direction very clearly and wants to be accumulated in one direction, you're going to do pretty poorly because you're going to get to see a lot of back and forth. You know what's funny? All of a sudden, on the YouTubes of the world, on the Instagrams of the world, I'm starting to see a lot of people trying to predict Tesla. Everyone's going like, well, Tesla's doing this, or it's going to go down, it's going to go up. And what's funny, at the same time, is I see a lot of traders come and they go, what do you think? Can I trade Tesla? Is it good to trade? And I look at it and I go, compare a good context on Tesla when it was good. Look at how it moved. Take a photo, a mental snapshot, record what happened here. Compare it. Do those two moments in time look similar in any way? No. Price accumulates, accumulation above the EMAs, serves higher, wants to move higher, moves higher, continues moving higher, serves, goes higher, bullish ranges, short-term ranges above the 200. Hey, Anton, should I trade Tesla? Below the 200, under all the EMAs, ranges that are going back and forth. One range recently that went bullish and now is stuck, but not above here in an accumulation while being under a low, coming down here in a longer term, back and forth, sideways. I see this and I think that person saw a lot of the YouTube videos online and are thinking, damn, Tesla could be a real move, right? I really want to trade it. But the reality is there's nothing here. And what's funny is, if Tesla is going to be a good move, it's going to start that kind of move. And this is where I'll get involved. Here or here. Here or here. This is where I want to trade Tesla. Why would I try to predict that, this is predicting a low. This is looking at a market and saying, maybe it's the low. I hope it makes a move. Versus money's come in. Money's now making structurally sound bullish moves. Price is now moving higher, maybe surfing above all the EMAs. Maybe the 200 starts to come up like right here. Everything is pointing to the fact this wants to go bullish. Versus whatever this is right now where, I wonder what the screener reads on this thing. On the daily, it just became bullish. The weekly is red. The monthly is bullish, that's fine. Then the 8 hour is like bullish, 4 hour. Yeah, so everything's showing bullish because of this most recent break. That's really it. So even though you have overall bullishness, you have underlying weakness from the actual market itself. So I would completely ignore it. Peacepod says, would you start watching here? Oh, there we go. Yeah, it could be a move inside of there. Yeah. Starting to watch there and even like here is fine. Like all of these areas are fine. And there's actually probably trades in here that still would have ended up like break even or okay. But then after this failure here, I would stop watching until it like rebroke over these highs. And then it never did. And since then, it became a useless market for me, right? Christian says, looks like you changed your EMAs to 921 from 1020. Did I? I don't care, dude. Here you go. Still the same analysis, right? Tev says, that's exactly what I saw when I mentioned it, but I only said it looks good. I disagree. I don't think it looks good at all. I think this is like the shittiest market in the moment right now, right? Like, so, and the way that I want you to think about this is, okay, we've been following NASDAQ for a while, or US 100, right? Look what it's done in the last few months. Look at the moves it's had. Look how it's moved. Look at the accumulation, the continuations in structure, and then the continuations in structure here. Compare it to the stuff that I've been trading. This thing is relentless compared to the stuff that I've been trading. This thing tells you where it wants to go. And then compare any of those. Like, I'm gonna do this one more time here, but here's something I've traded. Here's something else I've traded. Here's something I based those trades on. And here's the thing that you're saying kind of looks good and might be good. This is like, this should put everything into perspective in 2 seconds, right? What have I done? That's something I've traded. This is something I just traded / am trading. Here's something I've been basing those trades on and or trading, and so have members. Again, this is why you need to collect the data. And then this is what you're considering or saying looks quite good in relation to those. Right? Sometimes it's a question of just putting them side by side if you really need to, like to start. Compare what you're seeing here. Compare the things that I'm making, money on versus what you're saying is like a potentially good market. Now, again, this is not me attacking you in any way, because you might even make money in a market like this. That's okay. But compare. Above the 200 in accumulation, moving higher, protected lows moving higher, above the MAs, flushes out, keeps going. Above the 200, protected lows moving higher, flushes out, MAs moving higher, everything moving higher, wants to go, flushes out, expect the higher. Moving higher, flushes out, still above the 200, start moving higher, over the protected lows, flushes out, wants to go higher. Okay, so we know the things that have to happen. Just based on what we saw here, right? We need to see protected lows moving higher generally, flushing out nicely, above the 200, continuing higher, moving higher. Okay, here we go. Moves higher, above the 200, comes under the 200, keeps moving higher, breaks down under the 200, re-breaks the 200, not breaking ranges higher, making lower protected lows, breaking lower with protected lows under the 200 MA that's moving down now, downwards moving MAs while going down, most recently breaks up, no protected lows moving higher whatsoever, under the 200 MA, in a choppy 50, 20, whatever the fuck's going on here. So what part of this hits the part of the brain that says maybe, right, is all I'm trying to get to, because it's very important that you define that for yourself, because, you know, if you're looking at a market like this one and going maybe while you see these, right, the question becomes what's going on there, right? There's just clear, stark differences. And just so you guys know, I did a version of this over 20,000, 30,000 times easily, right, for myself. So like when I look at something like this, it's almost instant of like, no, While other people will actually zoom in and be like, but maybe, you know, breaks out, maybe you know, go that, and then I can maybe get a move. It's gonna be super nice, right? It's like there's nothing to do here. It's more than likely going to move sideways or just push lower. Exactly. And then someone else asked just now, Patrice said, would you be bearish on it? Well, the weekly says it's bearish. The monthly says it's an accumulation. The daily says it's in accumulation, but actually it looks like redistribution. The 4 hour says it's an accumulation. 2 hour says it's an accumulation. Or, sorry, in redistribution. Quite an ugly one. So, would I be bearish on a market that is clashing across timeframes? We're not definitively moving in a given direction at the moment. I wouldn't. Right? Maybe if it breaks down through lows, like, because, you know, I'm looking at weekly, daily, and 65-minute, 10-minute, around those, right? So, I mean, you have started some kind of distribution. It is moving in distribution here. It's under the MAs, so that's like actually good. I'm going to invert this for 1 second. So that's good. You know, honestly, if anything, yeah, this is a better short than it is a long, right? So there's a potential to move lower, but as we get lower here for a second, you're just kind of stuck. I would 100% wait for, at minimum, this kind of move, maybe some sideways, and then maybe looking for this continuation, because then at the minimum, you'll have those lower time frames, the hourly or 65-minute, whatever you want to call it, actually move into distribution, right? Or like better confirmed distribution. And then you can follow those short. So right now, it's actually nothing. It's a nothing market. It's a nothing burger. There's just nothing to touch here, right? I'm much more interested in trading a market like this, right? Like, let that market just prove itself to you. The problem right now is that this is for bearish what this action here was for bullish. And even though it might work, I wouldn't do it. I would let the move come. Let it prove itself. Even if you started trading here on Tesla, would you have made money on the long side? Yes, but it's proved itself at that point. So at minimum, this right here, right, it needs to prove itself, right? And then you can either trade here or it'll prove itself heavily and you can trade it short here, right? Because that will be the replica of what happened here. Because that's how markets tend to move, right? Where you have this kind of back and forth. It's not really sure where it wants to go. It might be bearish, might be bullish, not really sure, right? This is kind of what we call the blueprint, where, you know, there's back and forth movement a lot. And then all of a sudden, right, you have some breaks higher. So it starts to prove itself, but you don't know if it's going to do it. And then here, it just rips, right? And it shows you that it really just wants to go. And then it flushes beautifully and gives you opportunity, right? The opportunities that I want to take long on this don't exist here. Like, at this point here, I don't know what this market's going to do. It's like bearish even. I would even, if you asked me about it here, I'd be like, it's bearish, right? For all we know, like I said earlier, this could do right now what this did here, right? Look how similar it looks. Bearish moves, breaks bullish, bearish moves, one time bullish, right? This is what it looks like on lower time frame in here, right? Or look, or even on this time frame. Bearish moves, breaks bullish, bearish moves, breaks bullish. So for all we know, yes, this could happen, but I'm going to trade it after this leg is made. That's what I care about. Because if this leg is made and money's proving itself, what's the likelihood of that money having proved itself to now happen? To keep going. This is now where I want to trade. This is where I want to trade. This is where I want to trade. This is where I want to trade. And similarly, right, this is where I want to trade. This is where I want to trade. This is where I want to trade. And that's it, right? I don't need to try and predict that this might be accumulation. I let the accumulation come in, and then the trend becomes as clear as day, rather than trying to constantly guess, right? I'm going to scroll up here a little bit, because I think I hit the main things I wanted to hit just for the start of this, the start of this Webby today. Move this back over. Morning, first Webby for Leonard. What's up, man? Good to have you. Good to have you on the team. But yes, before we continue, you know, just take a look at this. This is exactly, you know, this is the kind of, so what's happening for someone that's trading Tesla where it is right now, right, is you're looking to trade, you're trading this action right here. And you might, just like we just saw, you might get it correct. If it does make that big up move that we were just talking about, you might get this out of it. Maybe. But likely, this won't exist, which means if we replicate what happened overall, here's what your equity curve is likely going to look like. Comes down, comes up a little, comes down, comes up, up. Something like this, right? So you might still be at break even or in deeper drawdown if it continues to go sideways, right? So you're asking the trade a context like this with the hopes that you can get and nail a move like this one, where yes, I got it right. When you could wait for the move to prove itself, and then your equity curve looks like, if we start here at the 0, now your equity curve looks like this. Right? Something like that. Right? Just from a 0, which is great. So congrats, Sapir. It's a really cool thing to see from your end, truly. And I'm happy for you. Changing things up, yes, sir. I'm inverted today. I'm not inverted. I just moved. I moved everything around. That's all I did. The sun is shining. It's a beautiful day. It is, man. It is. Deathshot says, did the same testing on XXXJPY, good context, and then USD CAD, shitty context. Didn't even exit drawdown, testing the UCAD. Exactly, right? So again, the more bad context you truly try to like really predict, yeah, like look at this, right? There are people sitting here every day showing up with UCAD as their main pair, just trying to get this thing right? And it's probably such a hard time. Like this is when people say trading is very, very hard. This is what they mean, because they're sitting here trying to predict the market like this. And I get it, right? If the institutions, the money that controls trillions, billions, millions of dollars and moves in with positions of billions, millions, trillions a day, don't know what the fuck they want to do with this pair or this asset, what makes you think that you on your little account are going to be like, I'm going to come in there and I'm going to take a small move out of it. It's like, you're crazy, right? It's crazy. Like, these guys, the big guys, don't know what the fuck they're doing. That's what this is showing you. It's showing you that they have no idea how they want to orient themselves, how the orders that are coming into this market are actually going to sustain themselves, or if they're even going to sustain themselves. All they know is we're going to buy some today, sell some tomorrow, maybe buy some more, then sell some more. Again, it's just back and forth. And the more you try to trade the context like this one, right? the much more complicated trading is going to feel to you. No shit. Right? Imagine every day you showed up, these are the markets you decided to trade and try to predict. Versus a lot of the members that have gotten funded recently over the last few months, does anyone know what they've been generally trading? A lot of people getting funded have been getting funded a lot on futures lately. Can anybody guess what market they've been trading? For the most part? Right? And it's funny because I recently had a one-on-one with someone that, you know, kind of started to see some of his like live equity curve stuff deteriorating. And we kind of went over the discussion of context, right? Because he tested it on pairs that were doing very well and then recently started doing not so well. So when he continues to trade a pair that was good but is no longer that good, what do you think is going to happen? And what's funny is I offered him like a piece of information. I said, listen, you don't understand how many quote unquote new futures traders we have in this market, where everyone is so happy that they're a futures trader. They think they're so like, they're just having the time of their life and they got to trade this and this. And they're just thinking that this is the easiest thing they've been in. But likely, you know, it's still going to probably make a move. But in about 2 months, maybe a month even, this is going to go into a multi-month back and forth or very long-term sideways, much more chop, probably even come down further. Very long-term chop. And what's going to happen is close to a lot of the people that don't have proper systems that did get funded during their futures career in NQ or whatever, there's a lot of money that's going to be now lost, go back to break even, or lose more. Because, you know, a lot of people got introduced to futures, specifically trading NASDAQ, during around these times here, right? And since then, it's felt like, hey, futures are quite simple money. Everything makes sense every day. Everything delivers beautifully. But look at the market you've been trading. Look at the market, you know, some people have been trading on Bitcoin, for instance. Look at the market some people have been trading if you've been trading UJ on UJ. Look at the market you've been trading on those futures. So what I told to this guy is like, that I was having the one-on-one with is, listen, you know, this is a normal thing that happens. And it's likely going to affect a lot of people, maybe even some of our members. Because some people just got funded, just found success, found their profitability on, let's say, quote unquote, futures, because they've been trading this market. When this market goes into its inevitable back and forth, longer term chop, not so much accumulating anymore, kind of back and forth, maybe even an EU likely back and forth, where it's like maybe moving higher, coming lower, like something like this, right? Where, like almost like USD CAD, where it's like, you know, what do we want to do? There's going to be a lot of people trying to predict the moves on this. And all of a sudden, all those people that you see funded now on Instagram and all these places, they're likely going to go into a much deeper drawdown or even become very confused with their system. This is where confusion comes from. It's becoming very attached to a market or a specific thing that's happening without recognizing that it's the context that is delivering, right? And nothing else. So just something to keep in mind, especially for a lot of you futures traders. You know, it's not me saying you're going to fail, but I'm just making sure you understand that, you know, trading at a time like this or a time like this is a lot different than trading in a time like this. Okay, or like this, or like this, definitely this right here. I saw a lot of people start losing accounts and go really crazy during this time here, and this was a mini correction. It was actually just a mini flush out, right? Imagine like a normal flush out or a normal sideways action. This is going to chop a lot of people up. A lot of people that made the money now are going to lose that money later. So it's just something to keep in mind, because that's just how the rhythm of the market sways, right? Something that might have been clean or something that you've tested that was clean that you then try to go live on, but it's no longer clean, is of course going to be met with more chop, more loss, and then as a result, the loss of accounts, right? And as a result, then confusion. So kind of this one-on-one that I had, you know, this guy was, don't go. Let me actually open the chat on this one too, so I can see it. There we go. I have to leave early. I see you, man. Oh, interesting. So Sapir says, I'm one of the newer members, and I thought I lost my edge on the last circle you drew. Right? Exactly. Here, or even for a short term here, right? I saw a lot of people get confused during this time. Now, luckily, for someone that was confused but still taking longs, do you think they still made money overall up till now on this market? The likelihood is yes, because guess what? It normally came out of its stage 1/stage 2 and started a beautiful move that we've now been participating in. But imagine this didn't happen, right? What would happen to your system? How would you approach or think about your system? Would you start changing the way that you trade? Would you start doubting yourself? Would you still be continuously looking for trades and entering stuff on a lower just because, hey, you know, like clearly it's this market, it moves clearly and it makes good moves. Just something to keep in mind. Yeah, and right here, right, same thing. A lot of people started to really, quote unquote, lose their edge here. Let's call it that, right? Because they don't realize what makes their edge. And then I started watching this thing again around here, right? When it started to come back into accumulation, then we started following it again. And all of a sudden, you have delivery. So, yeah. USD CAD looks wild right now. Yep. Deshot just tested it out of curiosity, confirmed myself it's not worth trading. There you go. Exactly. Hearn shares a document of his trading. Okay, that's pretty wild. 5-minute entry, 667 trades. only a third of them are wins. And this is compound inversion. Yep. Seems about right. Yeah. This looks phenomenal. And I mean, you know you have long-term edge, which is the most important thing. Now, this risk of ruin is probably not correct. So we have to fix whatever's going on here, because this should not be right. This is not correct. So we have something going on there that's wrong. I think you're actually using the old version. Yeah, Dan says you might be using the old version. I think you might be using the old version, so you should check on that very quick. When the MentFX guys start moving the market with their entries, we have a problem. Yeah, no. Are you still working on this? On what? You're going through all the stuff. They want to trade short to long the market and long to short the market. Yep, exactly. John says, trading with the trend was a game changer for me. Yep. When you start realizing that, like, it's a lot easier to potentially make money when you're just kind of trading in tandem with the thing that's happening. You just start realizing, like, almost instantly that there's so much stuff that you don't want to ever touch again, because none of it's clear anymore, right? Like, the better you get at just understanding that, hey, if the market's moving in a direction and it's pretty trendy and it's not extended or it's flushing out nicely on your time frames of entry, that's it. That's all you need. The more you do that, all of a sudden, the much harder it becomes to look at a market that is back and forth and go, am I a trader? Yes, I am. Can I trade this market? I'm going to find a fucking way to. Where's it going? I don't know, but I'm going to figure it out because I'm better than the rest. And it's like, it just makes no sense. You don't need to be that person. Leave that up to the people on Instagram, literally. Watching 1 minute candle 16 hours a day. Yep, exactly. I guess it works for small accounts on really low time frames, but not scalable. Even then, kind of not. How long is it going to take approximately for this to be done? I don't know. As long as it might have to be, but I hope that I can get it out, or elements of it, maybe this week, maybe the next. But there's a lot that's going into it. There's a lot of structuring that I have to do to it. Imagine how crazy the FOMO is when you trade all the time in all directions. Oh yeah. Welcome to why we have the 90%, 80% problem. Right? Christian, that's exactly where that issue comes from. That's this 90% fail, 80% fail, they don't know what the fuck's happening. That's where that issue comes from. Because in reality, imagine all the emotions that you still feel right now. Imagine all the confusion you feel right now just trading one direction, right? Because that's kind of what I've taught. And that's what I teach now is, hey, try to orient yourself in the market and trade in that direction. And now think about how hard already just that is. Because there's still a lot of things you have to learn about it. Now take away that and now trade any market in any condition, in any chop, to both directions of the market at any point, whether it's extended or not, within ranges and trends, above and below MAs, within MAs as well. And tell me if you think you're going to find profitability doing that if you haven't even when you have issues trading one direction, right? It's crazy to think about it, which is why you get to this point where you realize, holy shit, you know, I have to do a little bit to be better than close to everyone around me, but you gotta fucking do it. TB says, I can't believe I really traded like that for 3 years. Yep, I was there too, man, for a long time. Most people are trying to increase their trades. Exactly, Dan. Yes. And then Baby No Money says, one of the biggest mistakes I've ever made. And Daryl says, I'm fortunate to have never executed a live trade, and I know I don't need to overtrade to make money. All about the R. Good. Good. Trading in chop brings tears to my eyes. Don't get chopped up. Yeah. Let the money show its hands. Agreed. Leonard says, what if your setup set up many entries on different assets the same day? Trade the ones that are the strongest. Trade up until you're using up your entire position size, and trade each independent trade after you've moved one of them to break even or taken risk off. Because there's no point to open up yourself to more risk or more exposure if you haven't limited your downside already. iPhone says, how can we identify chop better to stay out? Sometimes market itself is moving clearly, but either has choppy ranges or price action, like XXXJPY lately. And what's your thoughts on XXXJPY right now? For example, GJ. The same thoughts I had last week. So it's a two-part question, but the better way you identify chop is by spending more time looking at markets that deliver well and then looking at the ones that don't, the ones that end up chopping. The reason I haven't watched any of the XXXJPY pairs is because I'm not used to price action delivering like this. That's really all it came down to. This kind of delivery, I'm not used to. I'm used to the cleaner moves that then take a little bit of time and then start coming up over, pausing, and then going. This came down, instantly came up, then came down heavily, right? Since around this point here, I was uncertain about the way in which this market was delivering. And I expected it to chop because it wasn't moving in what I call the cycles or the clear stage 1s and 2s that I expect out of a market that's going to make good moves, right? Oftentimes, I want to see something along the lines of kind of what you see here. After the flush out, price pauses, builds up, true accumulation, begins moving, and then I can enter until it inevitably fails. This is a phenomenal example here. Price comes, it pauses to accumulate, and it accumulates through, very clear action, and these are my entry opportunities to then hopefully create a move. Similarly, okay, price slowly accumulates, comes out of that accumulation nicely, comes down heavily, but that's okay, pauses clearly at the MAs, moves higher, and these are the opportunities to get potentially positioned long, or here, because there's very clear action. Then you get to what's currently happening. Price ran up aggressively, huge wicks, indecision, collapsed heavily, huge wicks to the downside and the upside now, collapsed heavily, didn't pause within the MAs, did not build up any accumulation, broke straight up through it, then collapsed back down, and now is just moving higher. That shows me that I have no fucking clue how money's actually wanting to enter this market and likely going to result in more chop. Same thing on GJ. Price runs up, collapses down, instantly starts to run up. No pauses, no bases, no mini accumulations, no mini MBs, just straight up. I assume when this happens, you're likely going to get more chop. That's it. Right? So my thoughts have been chop until it resets. Because I'm not interested in a market like this, right? This is just unclear to me. This is not how prices tend to move. I remember I made this specific case on this week here. These kind of moves are super weird to me, right? I want to trade when price is just doing this, right? Starts making nice MB, and then I can follow it lower. Nice MB, starts following it lower. MB, starts following it lower. Nice MB, slow, clear, accumulated, wants to go higher. Oh, getting kind of weird, but then pauses a bit, can follow it higher, can follow it higher, can follow it higher, gets a little sus, and then takes off, huge move down, and now is going up for like 3-4 candles. I don't know what this wants to do. This looks like it could do this next candle or this next candle, and I would not be surprised. So when that's my experience or that's my thoughts, that means any opportunity I take is likely going to be met with that or continuous chop in that area. So any entry I take is likely going to be met with confusion, with quick break evens, quick losses. So as a result, I don't want to be a part of it because it's not showing me that there's a clear move behind the market, where the fact that we've now gone sideways, like maybe something like this, means that if price does start to move higher or break out of like these FMBs or whatever, then price is just going to either deliver with very low downside risk for huge upside, right? Instead of just this random, like, what's it going to do next? So that's why I've ignored it, because I have no idea how it wants to move. UJ, same thing, right? I'm not used to this. Clear, 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 unclear. What I want to see from this, just like you saw me draw out, is hopefully a failure back down, a few weeks, probably 2 or 3 weeks of just kind of this sideways, and then that will build up a nice MB that's now being bought up, and then we can watch for this. Otherwise, I'm ignoring this thing. That's really it. So to put it in a better way for you, right? For me to trade this, let me find if I can see another example of something like this happening where I would have waited. There's not a lot of examples like these because, again, I've never seen a good market that does that kind of thing. But yeah, like there's no examples of something doing that, right? Okay, maybe something like this. This is what UJ right now reminds me of, okay? Huge down move after huge up move. No consistency, just kind of starts running up. So right now, if I looked here on a lower time frame, do you think the price action in here on the daily and the hourly would look the same as the current action on UJ? Where it's just bullish and accumulation, but it's also moving in like kind of chop. And it's really weird. I would say yes. So this is where that would be happening, right? This is the moment that I kind of expect that would happen. And then you can see here, it does end up chopping until what? It creates some more like little tighter range by which, orders are starting to accumulate. And then as it starts moving higher and breaking out of the like little pivot or MB or demand, then you can expect longs, right? Then it re-breaks down, so you start ignoring again, and it does the same thing. So if it can break maybe to like this 99 area, 99.5, you can expect the stage 2 to start. And that's where I want to trade. So I'm assuming if this is exactly what UJ is doing now, UJ needs another 100 days, or maybe a little bit less, like 100 days probably. So it needs a third of a year to set up. That's how uncertain I am over what's going on here, right? Like I truly believe this is that moment where it made that move down, started that move up, and now what it wants to do is it actually wants to come down for a few weeks or a third of a year, go sideways, build that up, and then start a stage 2 here. And again, if this happened, would that change the overall quote unquote screener reading of general bullishness? So Botboy, Burko, exactly, it wouldn't, right? A lot of the lower time frames might transition into some distribution or redistribution for a little bit, but around here, the screener of the weekly, because the range we're in, would remain what? The same. And if this range built up to being around this long, would that kill off the idea of the range not being short enough? It wouldn't. This is exactly how long ranges tend to last. We can go back and find that same example, right? This is still a fine like length of a range in my book, right? So that's what I would expect. Like, and then I just want to show you guys this, right? I just want to show you this right here. I'm going to go back. Let's take a look what this looks like on a daily. So, this is where it's very important. Like if you start tracking this, take your photo. Where's paint? Take your photo. Okay. Take your photo. Like, you can label it. You do it however you want, but where's black? I don't know. Whatever. Context time frame. Okay, let's go look at a lower one, like a daily. All right, compare them now. Daily's just kind of coming up nicely. Okay, cool. Take a photo if you want. Look at the hourly really quick. Right, hourly is kind of in this accumulation, reaccumulation keeps going. And then go ahead and compare the exact same action. So this is after the up move, a few up moves, to what's going on right now. Also had those 3 little up moves, right, or so. Around the same. Take a look at your daily. Right, if anything, it's worse. If you guys remember what we saw on the daily back there, this is even worse in terms of clarity. Hourly, right, also basically the same, right, but worse, more choppy. So more wicks and chop on the way up, same reaccumulation. So again, those 2 times, one of the times that this has happened before didn't work out well. So what do you expect is going to happen to right now, right? This just reminds me of the exact same thing. Where was it? Right here. These 2 remind me of the same thing. Yeah, they're a little bit different, but this is, the more you get used to seeing the same shit play out over and over again, the more you're like, okay, this needs time now. And that's it. So every day, every week now that I've looked at UJ and I look at this, I go, okay, it needs more time. I have nothing to do. I don't care how clear now, something here might look, because I know it's likely going to end up in chop or unclarity. because I know that right now it wants to go sideways. So if I'm trading a market that is likely going to go sideways, am I going to make money? Probably not. So I'll ignore it. So that's how I did that. Superior Loki always drops us. Yes, he does. We have so many members that drop some amazing stuff every single week. Jacobo says, but the patience and the mindset of waiting for a good context comes to know what characteristics create a good context. Because if you don't know what to expect, the FOMO will be present forever. It's not about only being patient. It's also knowing about the characteristics in the market creates good opportunities. Yeah, of course, right? Like this is a good example where a lot of people are likely seeing this move happen now, and they're really FOMOing because they're afraid they're going to miss this right here. I mean, if this happens, I'm fine. I don't care because I know I'm not used to this, right? This is not the characteristic of a move that I'm happy to trade because I know that on average, when I've seen this happen before, it doesn't tend to deliver well for me, right? So I'll just ignore it. Ali says, I'm sorry, can you, in short, explain what a bad context is? The clash of multiple time frames, unclarity in terms of the delivery of stage 1 and 2, unclarity across time frames, which is basically the clash to start with, immense overextension, very large wicks or moves that don't have time to properly stage 1, which is kind of goes back to the idea of stage 1, stage 2, screener reading, all of that, basically. That's exactly what I saw when I mentioned it, but I only said, oh yeah, we saw that. Sorrel says, is it also because Tesla is also a stock and you're expecting overall bullishness? What do you mean, brother? So I don't want to look at Tesla. I think Tesla is very ugly. Josepha says, hey, Ment, your Instagram story about on how a person could stuck in 2 phases, beginner quick money phase and second fear state to test it. I'd opened my eyes and I'm stuck in the second phase even after 2 years. The beginner quick money phase, yeah. The second fear state to test it. So that was a discussion that we had regarding, initially you just kind of do anything and everything. And because you've done everything and everything, when you're actually doing it live now, you think you need to spend infinite more time actually testing. So this comes back to the discussion we had about when is it time to put your system to use, right? When is it time to actualize your results? And my answer to that is almost always once you have a collected equity curve, whatever it is, like of any of the equity curves that you recently saw from the people that have posted. When you have an equity curve that is collected and looks anything like that, or even somewhat profitable, I think that's a very good time. Now, this is not financial advice of any sort, but if that was me, that would be the time that I would step onto funded accounts or small live accounts or small funded accounts, whatever works for you, to start applying. Because what oftentimes happens is because of our pasts, and a lot of our pasts are the same, right? A lot of our pasts is we lost a lot of money doing a lot of stupid shit. So we know that we have to do a lot of work to not lose money now, right? Is the way that we have to think about it. Or like we've seen the potential of losing a lot of money doing stupid shit. So what's going to happen is when you're actually testing and getting your live results, which is what a lot of you people are doing right now, right? You guys are doing the proper data collection. And when you start seeing actual positive results, instead of thinking of, hey, I should actualize these results and start, applying them, instead of doing that and making trading an actual thing that you start pulling money out of, instead, you think back to your old self and go, no, there's no way, there's no way I can make money doing this. There's no way that this is real. I need to refine this even heavier. I need to do significantly more work, even though it's profitable, right? So you're letting the mistakes you made in the past, which are mistakes, really affect what you could be doing now. Now there's a delicate balance there, but for a lot of people that, come over to me and send me curves of 600 plus trades, 500 plus trades, and there's a clear edge, right? There is close to no reason that if that was me, that I wouldn't be starting to actualize those results in proper forward testing, whether it be on a simulated account or a small funded account or a Ment funding competition account, which are going to be back soon, guys. So make sure you start signing up for those when it's time. There's no reason not to, because it's very important that you start actualizing them. So to the guy that said, Huzaifa, you need to jump out of your fear state, because if you have the data to prove to prove that there's profitability, that is a very big difference from who you were when you were a beginner. That's really it. The rule of 6 and 60 only be in the remastered, or is there already something explained in existing lessons? It's in recent webinars, like a lot of them, like basically 100 onwards. But it will be in the mastery section, yep. Sapir says, it could be that one trade that carries the equity curve to break even, but in live, we're probably going to miss it. Yep, exactly. Exactly. Adam says, do you think looking for shorts around here on NAS 100 15-second entry is a bad idea since the overall market is bullish? I mean, 15 seconds is a very, very low time frame. Very far disconnected from some of the even very bullish context, because a 15-second on NAS, a 15-second chart can have like an almost unbelievable trending run, while the higher time frame is still extremely bullish. So, you can't just take a 15-second and be like, I must look at the daily. Even though I usually like to line up more things, just because I think it's better, right? But it's the idea, like, if a 3-month chart is bearish, but then my actual time frames are bullish and showing bullishness, I'm not gonna not take the trade because of the 3-month. It's too far disconnected from my entry. That might be on like a 60-minute or 10-minute, 15-minute chart. But that said, you have to tell me when it's inverted, or write something that it's inverted. Got it. I mean, yeah, this shows clear bearishness. You could have been watching anywhere here for shorts or longs, but yeah. It's fine for a lower time frame. I don't see why not. Looks like a clear delivery. Jacobo says, understand the tools that Anton provides us. In a deep sense, it's vital to know when it's good context and when don't. Yep. Tev says, as you said, that was literally me trying to predict the low without even knowing. Just because I have market mechanics understood doesn't mean I've gotten rid of the actual habits of forcing trades. Yep. Because you can have the market, you can have the understanding of a market mechanic where if a big move comes in, it becomes a watchable pair. But then you take that a step further and you say, fuck the if. I'm going to be in it for that big move that might come in. And the reality is the likelihood of that move coming in is probably like 10% or lower, right? So you're forcing an idea in a market that is likely 90% of the time not going to do what you want it to do. And then you probably wonder after, like, why are all these trades not working? Because most of them won't work. And then you probably will miss the one that does make the big move, right? Ole says, in quotations, price needs to prove itself. It's something that I began to notice the real power of recently. I'm going to burn that into my brain. Yep. It's a very good way to think, right? If the market is made up of what we call the composite operator, which is the way that we like to think, and there's an institution or like a huge money man, whatever, behind that market, when you see a true structural leg begin to be made out of whatever zone, or maybe even a bigger structural leg, what that's showing you is that demand has either been, supply has been fully absorbed and that demand is fully in control, and is now just taking that price higher. So if that's happening, then it makes it a lot easier to start to follow a lower time frame, right? Or to follow your execution-based time frame, because the money is literally proven that it's behind the move. Now, we might be wrong and it might refail back down, but when the money has already proven itself, what that creates is a way to invalidate, right? When the money proves that it's now in the market, the money has to now fail out of this market. The money has to fail out of this market, right? Something like this for us to stop watching it, right? And then we're fine because we have invalidation. But when it's proven itself, there's a very high likelihood that it just wants to keep going, and then it does, and then it does, and then it does. Right, so that's what we want to look for. If you give a chance for the market or any market you're watching to prove itself with a move, it makes it a lot easier because that thing's already been demanded, And when something has been demanded, it's usually for a reason. And if that reason becomes apparent later, or the person that demanded it wants to demand more of it, what's going to happen to that price? It's going to go on a run. And then all of a sudden you get shit like, what is it, CC, Cocoa Futures? And then all of a sudden you get shit like this, right? You get nonsense forever, and then something gets truly demanded, and then it gets demanded more, and it gets demanded more, and it gets demanded more, and all of a sudden you're here, right? And you're like, oh, well, that was easy, right? But wasn't demanded, or was demanded, but we don't know. Clearly, that money was demanded and is now moving higher, so that either means that, one, other people are now going to demand it. The people that did demand it want to demand more of it. The people that were selling this are now trying to get out of it, which means that they're technically demanding the thing that they're getting out of because they're buying back the shares or the stuff that they were selling. So what happens? You get trend. So when do we jump down to lower time frame? EVC, if C meets all criteria, then we wait for V to do the same. Nope, the opposite. Yeah. C, you have different criteria for different time frames, right? Sometimes the C has its own criteria for what you want it to do. Oftentimes, like you saw in Sapir's post, his context time frame needs to be above the MAs in like bullish ranges or making bullish ranges in more of a short-term range. For me, it's a little bit different. For me, my context time frame, yes, has to be above, but it's not necessary to be above them all, because sometimes I actually like that prices paused for a bit and started to build an MB, a shorter term MB within the MB we're in, whether it be the actual high of the real MB or within it, the demand zone, right? So like on a weekly, right, I'm more than, I mean, these already meet all of Sapir's, but like I will trade in here, even though it's below this MA. I will start watching for trades in here and in here and in here. Well, this would now meet Sapir in here, in here, in here, right? And then I would stop. And now I would 100% be watching again, because now, you know, this wants to go. So like for you future traders, you know, Cocoa Futures looks really good right now. I mean, it's been an accumulation. It's been demanded. Something that's proven to be demanded is likely to keep being demanded, even if it's for a short amount of time, but that's fine, right? It has just started being demanded again. And again, like, look how it's built this up. Right? It came down, it paused, it broke higher, and now it's going sideways. This is perfection. It's probably going to go sideways a bit more. And then off we go, man. Like, this looks yeah, I'm adding this. This is on my list. Okay. I will be trading this for sure. But this looks phenomenal. This is something that I want to personally watch, right? You're starting to stage 1, stage 2 delivery. It's something that's proven itself multiple times. It's probably over by now, but I don't know. So I'm going to potentially get it because, again, my invalidation is basically this. My upside is this, at least on a daily, right? So if price does just kind of fuck around and blow down through, that's it. I'm ignoring it until it either reaccumulates and then starts a new move, or until it fucks off to eternity, right? And then whatever. But if this was demanded and is demanded, it should become demanded again, and it should move higher, especially when it's showing such clear bullishness. So this is something I'll watch, right? And then since that's happening on the context time frame, I'll step down to my validation. I'll look at it. I'll step down to my further either entry or validation. I'll look at it. You know, this is phenomenal action. This is just this is almost as clear of action as I would want to ever get. Right? This is so good. And now you step down into entry, or you call the hourly your entry, and then you enter the trade when it becomes clear to you. Right? Probably break down, come up, and then get a nice little entry off of this thing. Because I expect a little bit more sideways. So I have to wait a tiny bit. I've tried backtesting UC a lot, and it's always very choppy and back and forth. Good. Ignore it. Simple. Release more one-on-ones, please. They are really good. I will, brother. I will. Sosa says, I got funded with US 30. Good. I mean, there's nothing wrong with that. I know a lot of people are getting funded on a lot of these moves right now, right? Like, the amount of people I've seen funded off of NQ in the last or that traded NQ a lot over the last few months has been insane, right? But also be aware of why that is. Look at the context you've been trading, right? Look at the context that you've consistently been showing up to take trades on. This is what you're taking trades on. Well, this is recent, but this is what you've been taking trades on. So of course, when something is like, when money's pumping into something very clearly, whether it be to the bullish or bearish side, then the trades you take are going to perform better. Christian says, I got funded when US 30 and Bitcoin made the non-stop run a few weeks back. Easy to pass when all goes up. The flood rises all ships. Yep. And then he said, needless to say, after funding, I crashed the account in no time. So that actually goes, you know, and again, that sucks. And I'm glad you probably learned a lot from that. But that goes hand in hand with what we're kind of talking about, right? Like, I told you guys about this where when I got involved here, you know, this was the easiest trade ever. I made like 20 R on this just out of nowhere, like 20% on my account or 10% of my account, done. And then I told you guys that a lot of traders would have started the trade around these points here. And a lot of the traders that started the trade around these times here, right? This actually kind of reminds me almost of UJ right now, right here. It didn't collapse more, but it kind of collapsed, right? The people that started trading here on this now up move, right? And then it started chopping. And then it started maybe going, but then chopped again and chopped again and chopped again and chopped again and chopped again. A lot of the people that started trading here because they were like, okay, this thing's making me a lot of money, are the people that also lost a lot of the money that they made. And now I'm trading it again here actually, but besides the point. I've given it time to reset though, and then now I'm trading this thing. I don't want to take it higher. Looks really good right now actually. I'll definitely be following this week. Shellings have to still leave early. All good, man. I'll see you. D13. 5 minute little long. Nice, man. Great. What's going on here? 5 minute 15, 3 minute 1 hour. Stage 1s and 2s. Trading off the zone buildups. Yeah, I mean, great. Good for you, man. Great trade. Not my kind of trade, but good trade. Dan said so many people lost their accounts during the short term there. Yep. And here, potentially now, in here, right? We spoke about this delivery. As it failed down, I stopped trading completely. Like, I thought it'd be a week of just this nonsense. And now it probably needs a week or two. Needs probably 1, 2, maybe 3 or more weeks now to go sideways. King says 70% of a certain firm's biggest traders lost their accounts in that short term. Yep, that's all it takes. So a lot of members with other prop firms lost their accounts here and are probably starting to lose their accounts here. Now imagine, just take a look at this on the weekly. Now imagine you would get a normal period now of something like this, or something like this, or something like this. What do you think is going to happen to every trader that has performed very well and made money, like potentially even on this little up move here? The same thing we always see. There's going to be loss, there's going to be confusion, and then the market will set up again, and it will make a move. People would likely start to try building new systems. Yep, exactly. And when this happens, people will try to build new systems. That's exactly what occurs. Yep. Sosa says, Anton, what are you looking for the next week? Bitcoin, Cocoa. Also, like, look at something really cool. I'm gonna remove all this. Look at something really cool here. Okay, Bitcoin runs up, kind of pausing out a little bit right now. Look at this. While NASDAQ, US 100, whatever you want to call it, just busts through a bunch of lows. Actually, closed above the 20 though. Let's see. this thing holds up. I mean, this thing's being bought up, right? That's what this is showing you. Now, it might go into deeper consolidation. That's whatever. I don't really care. But it's showing you that strength. That inherently is strength. That's really good to see, right? So I'll be watching that for sure. NVIDIA, I mean, this is just wild, right? This is absolutely wild. During a time where the whole market's correcting, this thing is barely going lower. But because of stuff like this, this indicates that US 100 likely wants to go into deeper consolidation. Because what's likely going to happen now is this is going to go into deeper, longer-term consolidation, maybe even a big move down again and then come up. While stuff like this will probably come down a little bit and reset the move to then make a new move, right? Or it just takes off. I don't know. It could also do that for sure. But I got stopped out of this 2 days ago, 3 days ago, 4 days ago. Stopped out of this week as well. Took a -1 there. Literally an instant -1. Entered it, got tapped in at the end of at the close of the market. Next day, boom, he instantly took me out. And that happened because the market fell off. And that's okay, right? The whole market fell off, so I took a loss. And that was it. That's all it took. All good though. Alex says, I'm getting confident with your older system, SSC plus double MB entry. Am I limiting myself by neglecting your newer systems? Listen, my take has always been the same. I'm doing what I do now because it's given me more opportunity. It's given me more refinement. It's given me more opportunity for entry. It's given me more ability to scale. It's given me more ability to trade multiple assets and to screen multiple assets. So I'm not ever going to look at someone and say you're limiting yourself. But I was limiting myself with the systems that I used to trade. I will only change my system if it increases the bottom line, improves my quality of life, or changes something for me that is better for me. That's all you have to know, right? If it was the case that extremely basic support resistance based scalping, where I take an entry off any support resistance, would make me more money while making me work less, if that was ever the case, the entire mentorship here would be me teaching you and creating tools around using support resistance properly. But it's not. I made a lot less money when I traded basic support resistance, and it was very randomized. And if anything, you could have even called it lucky. And I improved my system to one time frame based, zoom out, zoom in, try to draw things and predict it. And I made more money. So I taught what I did. And I tried to make better tools around it. But then as I made better tools around it, I simplified elements of what I was doing before and said, why the fuck was I doing all this? So then you see what you see now. And then that came to going, why am I even doing this when clearly I'm just trading trends? Let me just trade the trend, okay? So let me look around how I can enter something that's in a trend. How can I now use tools to find those trends? It makes me the most money I've ever made. Okay. So I don't think you're limiting yourself in any way. I'd be limiting myself though. Right? If you're happy with the system you have and it makes money, then trade it. But I'm just doing what works for me. That's it. Hyphen says, I'm in no way successful and a consistent trader yet, but as soon as I understood that the less trades I take, the better my results are, all I have to do is trade the higher time frame and get my context right. All I've been doing is waiting for my context time frame to get to an S&D zone, then drop into the entry and wait for double MBs and then a flush out. I either then enter on an ICI or just mark it by the flush out and protect the MB1 low. I've seen success with this strategy. Now I need to become consistent with it and then refine it. Good. Good. Mozero points to a high and says, just to be sure, this was a right moment during the flush out to watch for trades, right? Maybe I haven't. You have to go back and look at it. I'll look at QQQ just to make it easy. So you're saying, was there a right moment to look for trades in here somewhere? Start with my context, take a quick look. Yeah, I don't see why not, probably. What was the daily up to? Daily failed down, stage one, kind of based out a little bit. Yeah, I mean, I'd probably start loading up on some stocks in or around these areas here. And then as this fails, I'd probably get out of everything and wait and wait and wait. Probably wait and wait, and then around here, or right before that break, I'd probably start watching stocks again. Yeah. Do as the rules say, man. $200 trades, 200 R. Beautiful, beautiful win rate. Absolutely phenomenal. Love to see this kind of stuff. Without any of the big runs that you had, this system would be beyond profitable still. So yeah, this is phenomenal. You know, like when I see stuff like this, so again, just echoing the point I made earlier, when I see stuff like this, my only thought is this guy should be in some form of a live environment, whether it be forward testing on a simulated, so you can get 3 months under your belt, 6 months under your belt, whether it be a Ment funding competition, Ment funding evaluation, whatever it might be. This is a system that you should be testing, right? 100%. It looks really good though. Congrats, man. Just to be sure, this was the right moment during the flush out. Yep, looks good. I literally did a test with only the EMAs, no price action, only EMAs, and the system was profit with 100 trades, not enough. And the one thing I took away from it is let the EMAs open up and show you where it wants to go. Yep, exactly. When money's behind a move, what tends to happen is EMAs will kind of open and move away from each other, and then you have very likely money behind that move, because now it's very hard to push price back beyond down through all the EMAs, because now, well, the orders that are loaded up, they're averages, right? People want to either get into bigger positions unless they're selling their entire profit. So the institutions are going to rebuy at very nice averages to protect their cost, and the price goes. Same thing. They buy on and price goes. Same thing. They buy on and price goes. Same thing. They buy on and price goes, and then it fails, so you ignore. And then notice this as it opens back up, just like we were expecting from this point right there. Right? What's happening now? Prior buyers are likely starting to protect their buys. That might happen either for a move now or over a little bit of time. Those buyers will protect their moves. You'll get your move. Right? You'll get your stage 1, maybe a longer term stage 1 into a stage 2. And then we'll be higher up. Agreed. Close some profits on UJ. Good. Good. Peacepot says the pauses and the mini sideways on the MAs is basically a mini accumulation for you. Yep, stage 1 and 2. Exactly, just like Ole said. How about AJ? Probably the exact same thing. I'm just assuming. Yeah, same exact thing. Like, again, if you were trading AJ, it should have been traded anywhere in these accumulations here. Anywhere, right? In here, in here, in here, in here, in here, in here. This is now extended. This is literally extended. Now, this either goes and you get to manage your prior entries into profit, or this corrects, which is what I'm expecting, which is why I'm not trading any of the XXX JPYs right now, because they're not so clear to me. And they look the exact same across the board, right? Again, exact same thing. This, it needs to flush out and accumulate the position. It doesn't look like it wants to do anything right now. I'm 100, like, again, the same thing as you see on the UJ, right? Yeah, it's an accumulation, reaccumulations, but this is not the market I want to trade. I just don't expect these to hold, because my higher time frame is not doing what I expect it to do. I want to get in on the things that I'm very used to seeing. I want to see those same stage 1s. I want to see those same build-ups, and then I want to get in and hopefully hold my move, right? NVIDIA. This was perfect. Where did I get in? Somewhere in here on the lower time frame. Look at the move that happened. It absorbed the prior move. I wasn't trying to predict a random like low or high. I let it absorb the thing that I'm used to seeing. I let it start breaking higher through the MBs and the FMBs. It started to come out and over the MAs. And I took my trade in here to then a hold for the move. And now I'm either still in the move, which I'm not, or I'm waiting for a new setup, right? That's it. Same thing with Bitcoin, right? The move happened. I can't really do anything in these moments here because I'm not used to this, right? I'm used to the flush. So I waited. The flush happened. The flush then built up to a new move, did exactly the same thing, and then I traded it, as you all know, in here. This is where I made 10%, I think, on my account this year. Right off of this move. Then I got out somewhere in here on the management. And then what? I couldn't trade it. Maybe you could have considered here, but I didn't trade it because I waited. And then it flushed out. And then it broke higher. So where did I enter a trade? I entered one here. I made some money on it. It came down. I tried to enter another one here, if you guys remember, this week, and I lost on it. I broke even on it. What am I going to keep doing? I'm going to look for an entry. Is there any big difference between this and this? Scroll down a little here. Yeah, there's not. Exactly. This is the action that I'm used to. So I will enter the action I'm used to, right? So that's why when I look at this, again, just put those photos next to each other. Does this line up with what I just saw? Did it flush out in a clear way, build up a little base, start coming out of it so I can look for an entry? Or did this make a huge move, flush randomly, not build a base, start making a move? What the fuck? And I can guarantee you a lot of people, maybe even people in this webinar or the people watching this webinar in the future, are getting so much FOMO looking at this move happen. You might even be the person that's getting that FOMO. But the reality is, if it's not met the rules for a setup, or it's not met what you normally see, who cares what this does? I don't care if I wake up tomorrow and odd JPY is at 187. But you sure as hell know that if I wake up tomorrow and see it at 187, the number one thing we're going to see in the team is, oh my god, I can't believe I missed it. How do we predict this? Look at the fucking move. It made it jump to 187. This never happened. It's like, okay, who cares? This isn't the market that we want to trade, right? There's markets that jump like that every day. Some that are like complete scams. Who gives a shit? Wait for your move, right? Can't wait for AI Anton to carry on his legacy. All right. John says, Anton, could you please talk more about anticipating the transition between stage 1 and stage 2 on your higher time frame? Yeah, the exact thing I just kind of showed. Take a look at some of the markets I've traded and look at their weeklies. That's my context time frame at the moment. Look where it is. Weekly/daily. Compare it to some of the recent stuff. Right? You'll see the transition that I kind of look for. I look for that sideways into continuation. Sideways into continuation. That's it for stage 1, stage 2. Sideways and a continuation. I want to start looking here for my entries on a lower time frame if accumulation is met. Sideways into accumulation. I want to start looking here on a lower time frame for entries to be met. Right? Sideways into accumulation. I want to start looking here for lower time frames and it doesn't become clear, so I wait. Sideways into accumulation, sideways into accumulation. I want to look for my entries in here and here, if they make sense. I'm going to study the action in here to see if there's an opportunity that I can get involved with. And then you apply the exact same formula if you want. My entry should be probably, if I'm trading this, somewhere through these highs, somewhere inside of here. This is where my entry should occur, right? Maybe off of the first like MB up here is also valid. So I'll go look at either the 65 or the 10 or the 15, whatever I'm using as my entry time frame, to study what actually occurred here, right, for actual entries. How did they move? What were the stages that they moved in? How did it flush out before starting an actual move? How did the ICI look if I was to trade one? That's how. That's how I anticipate transitions between stage 1 and 2. I start at my higher and I move down. And you said specifically about higher time frame, so context. So, well, I wait for sideways, clear sideways, and then I look for continuation. Would you say CHF JPY is kind of like UJ, or it's better? Probably the exact same, just like every other one. Oh no, yeah, you're right. This one's actually a lot cleaner because it actually had a little bit of sideways. That's kind of like the thing I was literally talking about. But then you make your way to the daily and you have the same kind of little issue, right? You had this weird flush, but here you can see it actually built up something inside of here. Like, the fact that it did this is phenomenal. This was like your chance to maybe get position on this thing if you did. But because of the prior move, you can see that it, almost like this foreshadowed that this one, no matter how you got in, would still take you out. This candle here would maybe have taken you out unless you're trading like a much lower. Right? Because, yeah, I mean, this would be a very hard one for me to enter. Like, I would not be able to enter this thing. So this week, maybe your entries were like through the ICI here, potentially, right? Or through one of the ICIs in here. But yeah, so CHF-JPY is definitely the cleaner one to all of them for sure at the moment. And you can see there's a tiny bit, like this is the only thing that stands out. Everything else is pretty bad still though. Yep. But this stood out for a sec. But like I probably ignore it because of those prior moves on this thing. Yeah. I think I would not trade this, but if you did trade, CHF-JPY is the cleanest one for that reason. TevZ says, I started with options, and I remember you saying that's where you started off too. I recently and randomly went back and started using the same setups we catch here, and that shit is immaculate. Turn 25 into 400. Would you ever try it out again? Nope, it's a complete scam. Wink, wink. Subscribe to Men Funny YouTube channel. Hey, true. You should. Dan's putting out some really nice stuff there. Hello, Anton. I'm here for 3 weeks, and I have to say that this mentorship is getting me so much sauce. Bink. Finally, I understand how markets really move. Beautiful. I'm taking baby steps and everything, but I know with all of you guys, I have a bright future. Thank you so much, dude. Thank you so much for being here. When you say lower, it's 1 minute and under, right? Well, usually when I refer to lower, it's two ways. Sometimes I'll say lower in terms of my system, which is like 60 minute, 15 minute. Sometimes a lower for some of you guys would be like your 15 second, 5 second, 1 minute. Yeah. If you're trading the 1 hour now, you're using 4 hour and daily as your validation and context timeframes. Something around there. I use the weekly, daily, hourly, 15 minute, stuff around there. Same answer as a few weeks ago. I do not lock myself into time frames really. I'll use like some main ones, like I'll use like a weekly for the context right now, the daily for like validation / context, the hourly for entry / validation, 10 minute, 15 minute for entry, 65 minute for entry, whatever. What are your thoughts on UK 100? I think someone asked me about this a while back, and I said it needs to go into a deeper flush out, which it has, which is really good to see. Very clear bullish market condition. Yeah, let it go sideways for a bit. Build up some kind of high. Maybe probably under this MB or this fractalized MB, right? Let it kind of go sideways, and then there should be entries coming out of that. A pause, and then nice entries higher for stage 1 and 2. Looks fine. Looks pretty good. Yep, just started moving into accumulation here. That's good. You'll probably see a little bit of sideways now. Hopefully it even like just pauses for a while and then either breaks down and re-breaks higher or starts making moves higher, flushes, and then you'll have some entries up around here for sure. Looks good. Needs time to probably chill for a little bit, but I mean, it's not bad. Honestly, there might even be a setup like this week. This fractalized MB did get traded through, closed up here, so It could even pause for a bit. It could pause now, and then you could get an entry on this, or it could come up a bit, pause later this week for maybe a day or two, and then, yeah, it looks really good for continuation. There's no reason this shouldn't go higher at the moment. You had whatever this dog shit was, very, very awful. Then you had a beautiful move come out of it, and then chopped. But then most recently, you had this very nice just leg of demand coming in. So this completely changed whatever was going on here, which is good. Yeah, like reminding me of this right here. Right? So yeah, you can get a nice move out of this. Not a bad spot. Could you please drop the link to that Sapir post? Looks like that guy got you. Beautiful stuff on GBTC, yeah. This is just looking like it wants to go, go, go. I'll 100% be watching this for a long. We're in this MB right now, or whatever, right? Definitely can get some setups on this to keep moving. The endless cycle, says Dan, of market fuckery, combined with the ego boost and dopamine from hitting those wins in the challenges, they're destined to lose their fundeds. Yep, happens a lot. Deathshot says, me actualizing my testing gone wrong. All good trades though, waiting for some wins as per Dan's video, because you never know when the next win or loss or break even is going to come. So this was your, okay, so you had 1,000 trades of testing, great, and then you only have 12 trades here, and it's just coming down a bit. Yeah, this looks fine. I mean, like, looking at this, you know, you've had easily long-term periods. Like, these are those periods right now that you're seeing, right? This is even more long-term. This one's like for over, how many trades is that? This is 1,000, 500, this is like 200, maybe 100 trades of being at break even or in loss, right? Just make sure you're still following your rules and ignoring markets that are not clear. Very important. Can we look at ES? Yes, the exact same as NAS. Apply the same approach here to ES or NQ. They're all the same market. They're all bullish, but right now, I think they need time, personally. This was the opportunities to get in. Now is the opportunity to manage the trades you got into here and here, or get stopped. Let this kind of, let this go sideways, or find for maybe a week, probably one more week of sideways, and then reevaluate at that point based on where we are. Yeah, I think this needs some time. It's probably going to go sideways and build something, so then we can see new longs. I'm assuming that's going to be the same for SP500, ES, YM, all the futures that are the exact same market. Dan says, I've been testing the stock side of things this week, loving how things are exactly the same across all markets. That's how it goes, man. That's literally just how it goes. Trading bro. Nice. Very nice. Yeah. Overall accumulation, overall moving bullish, clear reaccumulation, even though it says redistribution, all good. Yeah, very bullish market, normal flush out, very good to see. Daily looks clean. And then you just enter off of your, what's this, the triple M? Or some other entry. Very nice, man. Very nice. Hi, Ment, I have a question. Sure, what's up? Number one is get off the phone. But let's see. I trade 1 minute and my validation time frame is 15 minutes. And my context time frame is 1 hour. Now I depend on stage 1 and 2 on the daily to start seeing the 1 hour time frames, which is my highest time frame. Is this right or not? Has your testing shown that you make money or not? Is the first question I'd ask you. And if it's right, in the pics I send, where I should start to look for my 1 hour time frame. So again, like, I don't know what time frame we're on here because you're on your phone. So I can't make much comment about anything that's going on here. I don't know what asset we're on. I don't know what's going on here. I don't know what we're looking at. So get off the phone, put on the watermark, and then we can go from there. In my opinion, King says, EMA system is superior because some simple EMA rules keeps you out of the market a lot, and takes next to no time to know when to not be involved in the market. Yeah, I think it's phenomenal when you have simple rules like that, for sure. Kevin says, great Webby, gotta go. No problem, man. Nico says, on GBTC, why did you not wait for an initial push out of the fractal stage 1 for the ICI? Kind of looks like you traded in the stage 1. It's just are you talking about the exact trade I took this week? And it's just a system that, an entry criteria that I've been testing a bit for getting in off of like this breakout of an MB, basically. When prices are already very bullish and moving in a very clear way and build up kind of that mini FMB or MB just under a portion, then come up over it, it's I've noticed these create very good opportunities that get you to break even quickly or just take off. So I grabbed it on this because I've been testing this entry quite a bit, but you could have just easily taken this one and broken even on that one too if you did. So. But this kind of thing does not always happen. So I've been doing some testing with this as well because I want to get to a point where I'm trading very powerful markets or like very strong markets and then simply have an execution that can get me in. So that's why. And it's a market that's already proved itself, and I had a trade already running on it that made me money. I already had this trade that was up 2RR. Was up 4RR. I took a partial, so already secured 2RR, so I was willing to put on more risk for more reward, and then just failed back down. No problem. Easy break even. And I actually got broken even on this trade too, right here. To the pip, right there. Got broken even on that this week. Tim Max says, I have personally found that if I can't ICI my validation time frame, then it's worth going to my entry time frame and obviously taking a trade. Oh, then it's not worth going and taking a trade. Yep. That's a cool way to think about it too. Any pairs on Forex on your list for this week? Nope. Not at all. The only ones are the XSX JPY pairs, and even then, those are just complete shit right now. I need them to reset. And then, again, like this is where we're kind of stuck here on GU for a long time. Like, yeah, it's bullish, but I'll let this either take off, then start going sideways, and then I can watch for this move, or I'll let this again build up there sideways. And then maybe there'll be a move here because we're at least at the 200. But I've been ignoring GU and EU for like literally a year or more now. Year and a half, something like that. And right now, I don't really have a reason to watch them personally. Right? The daily's finally starting a move, you can see. So just in tandem with that weekly, right? If this can start this kind of move, then great. I'll start watching it, you know, here or lower or as it moves higher or whatever. But no, absolutely awful. I don't like any of the FX pairs right now. I just think they're ugly. If anything, like you have silver, which has been super clean. This just went on a crazy, this had this crazy run and then it had a potential run, but then it's failing back down. While gold is what? Gold is doing exactly what we spoke about in the recovered webinar, right? I spoke about that this would probably go sideways for a bit, but now gold is setting up nicely because it's now making this little MB. A nice little area to break over. So again, if we can start reaching over, gold should become clear on a lower time frame. So pairwise or more like metal-wise, gold and silver look pretty good. Gold specifically. Yeah, gold looks really nice right now. I like gold. So I will probably keep an eye on this guy as well. CAD JPY, probably same thing, bro. Would you consider GU or AU even though they are in higher time frame range? That's usually not how I think. I like clarity, so I will wait for clarity for myself personally. But I'm sure I'm sure that you can, you know, take trades that make sense to you. When you traded your 15-minute entry, did you hold through rollover very often or close before it hit? It depends on how much in profit I am, how many partials I've taken. If I've taken a partial, if I'm, yeah, that's basically it. So yeah, a lot of the time I'd hold though. Sometimes I'd close. SPX 500 might be better, I think, stronger. Yeah, looks fine. Looks pretty good. Yeah, it looks like Nasdaq too, though. It's like almost the same thing. Rolling over a bit. I mean, it needs time. All of these need time. All of these are telling me they need time right now. I just, like, if this just goes right now, I will miss the move. I will ignore this move, and then I'll just look at stocks if they set up. But I don't expect this to happen. I expect it to, I expect it to just chop for now. It looks like it needs a lot. It needs some time, maybe 2-3 days or more. Maybe a week. Thank you for the Webby. Bless you. Bless you, brother. Exactly, sir. Those 12 trades ain't nothing in comparison to 1K. If I won't make a high in 100, 200 trades, then I will look for when I may be stepping away from my rules subconsciously. Good. That's a phenomenal way to think. Like, dude, that is that is so good that you think that way about your trading. Congrats. For now, I just think it's one of the worst periods, as you mentioned, and it will skyrocket soon. Yep. Based on what you're trading right now, right now it's pretty terrible. A lot of the indexes or whatever, indices, are going into a potential longer-term chop. I think they still have some fuel left in them, and I think we're going to get another move. But they're going into potential chop. A lot of FX is complete shit right now. All of it looks like it wants to just battle around, and even the good ones look like they just want to fuck off. Crypto is like the only promising thing right now, and I don't personally have access to all the other cryptos at the moment. So I'm just stuck here waiting. You know, I have to, and I haven't made the screener yet to have all the stocks, even though we're working on it. So I can't do a real deep dive of every good market to try and figure out, what can I be trading. So yeah, right now it just feels like it's a shorter, it's a more like sit on the sideline kind of time at the moment. Like I think the first 2-3 days of this week upcoming are likely just going to be me on the sidelines. I expect, and then I'll see where a lot of these indices end up after. If anything, the only saving grace right now might be like gold or cocoa, right? Yeah, gold or cocoa seem like the only things that might start making something. Like you might get a version of what we saw here happen here, right? Because now you started to build out that stage one, just like I said we would. So now if this stage one can now result in some kind of stage two move, then phenomenal. We'll probably get a multi-stage move up, and then we'll finally get to our like little guys up here at some point. So yeah, that's really nice. Solana is looking pretty good. I mean, I don't look at that stuff right now because I can't really trade it, but yeah. I don't like how long it's gone sideways though. That usually sucks. But if it can start like now, then this can make a nice move for sure. It looks pretty good. You're right. Yeah, I mean, same thing goes for Bitcoin, right? That's why I'll be watching it. I even said it myself. I'm 100% going to look for the continuations on this thing. It came out of the MB very nicely. Started that stage 2. Now it's into stage 1. Can easily keep making that move higher, right? Through these MBs, FMBs, and then just keep going. So I'll be keeping an eye on the lower time frames to start setting something up. You're probably going to get like a little something this week like that. If anything, yeah, I'm hoping that this kind of pauses. Monday or Tuesday takes off just a little bit, maybe pauses, and then like Wednesday just boom, I can get in this, something like that. Don't know exactly how it'll set up, but we'll see. Maybe something on the lower time frame can come out of this. but that'll be somewhere up here. So it'll probably do something like a little bit of that back and forth, and then it'll start doing something like this. I'll try to trade some of those moves. What about energy stocks such as GPOR? I don't know. I haven't looked at like many stocks at all, to be honest. Yeah, it's pretty terrible. I don't know. It's okay. I mean, if you're trading this, it's whatever. I don't like it. Just doesn't look so clean to me. But yeah, I could make a move. This is not usually my kind, though. I don't really like it, personally. Is Coco available on Men Funding? We might start adding stuff in the future, because, you know, these are different assets, so they're traded on different platforms and whatnot. So, you know, maybe down the line, but not at the moment, no. Thank you for going out of your way to recover the last Webby. Yeah, dude, it was a crazy week, but I'm really happy I was able to get it back out. And I do recommend after this one or later today, tomorrow, you guys check out the 154, because there's so much good information in this one. So I'm really happy I was able to recover it, and I think a lot of you could gain something from it too. Myron said, made some nice RR gains on my challenge account, trading it from -7 all the way into profit using ICI. Good for you, dude. That's awesome. And then we have a phenomenal looking trade outcome, or win rate / losses and break even. Looks really good, dude. I mean, like, yeah, again, when I see this kind of thing, all I'm thinking to myself is this guy better be like doing some kind of forward testing. Very important that you start actualizing these exact results. You need to start knowing how they actually interact with the real market, how your schedule actually looks. So yeah. Where can you get the Excel and whatnot? It's all in the hashtag the process sections. You have a lot of really cool stuff there. This is what I'm going to start shortly, forward testing. Good, you should. I mean, you should be doing a version of forward testing always. Like, anyone that has even 100 trades in their back testing and it shows even a little bit of profit should be showing up every day to the live market to just take a look at what's moving and how it's moving, and maybe take a note, really, like something along those lines. You know, showing up to the Webbies, seeing what we talk about, seeing the stuff we're watching, and then seeing how it plays out, right? Like, you'll gain a lot if you were here for the last webinar and you remember me saying, guys, you should not be trading this. It's likely going to chop. It's going to go back and forth. Anyone trading this is likely going to lose money. Give it a week or 2 weeks. Let it go sideways and then start a move. This is the exact conversation we had on this day right here. That was the Sunday. And then this week, what happened? Do you think anyone trading this on a lower time frame to whatever direction was able to make good money or make good RR? The answer is likely not, unless you are on a very, very, very sub-low time frame, right? Because this is not what form entry is. So if I went right now to a 15-minute or 10-minute or 60-minute chart, do you think I could find an ICI inside of there? Do you guys think I could find a clean ICI in here? Just a clean one, like super clean, like it's just such a perfect high. Whoa, look at this one. Wow, look at that. Such a clean ICI, right? Maybe. But why do none of them like deliver? Why do they make a tiny move? And then why do so many of them just like fail? Do you think if I was trading in a good context, would I take a trade like this one? Or like this one? Or like this one? I would. But I have an expectation on the market, and the expectation is that it's not ready in any way. The expectation going into the week was that we need at least a week or more of that sideways action. And just like that, I avoided potentially 3, 4 losses for the entire month, right? You sold it on the lower time frames. Yeah, I mean, I'm sure a lower time frame has a nice potential like bear setup. Yeah, I mean, it's in some form of distribution, and then much lower is just, based on the time frames you're on, you have some, like just a move like this could be your entire week made on a 5-second chart. And that's fine. There's like that's perfectly fine if that's the time frames you're trading and you're making systems around that. I'm just pointing out, for my system, that I would have not traded at all this week, right? Like, and it saved me money because guess what? No matter what direction I trade, even like on a 1 minute, even on a 1 minute, no matter what you kind of trade here, unless you get super lucky off this one rip, right? Like if you're trading a 5 minute this entire week, it's very hard to make money. Like, take the random game we played. Let's do it for longs. We'll do it 1 to 5 again. Same thing as we did last time. Smaller stop, 1 to 5. Play the same game. And we'll do 5 trades of each all week because, again, you have, we'd be bullish, right? So there you go. So the week starts on where? Where's Monday? Here it is. Okay, let's just randomize them now if we can, right? 1, 2, 3, 4. I mean, these will all be losses, so maybe you start waiting for it to go long again. 1, 2, 3. Right? I mean, unless you got this one, maybe. Right? So no matter how you try to randomize these, especially if you just, I don't even know. It doesn't matter how you place them. The reality is none of them deliver at all, and the others are either break even or losses. So then it begs the question, should you be worried about taking trades and looking for entries, or should you be worried about specific contexts that create good moves? And that's what always leads us back to the same thing. Wait for the context to line up with the things that tend to produce moves, and then look to get involved, because that's where money's made, right? It's like unless I literally, here we go. Unless I literally data Instagram level smart money concept pinpoint this exact high, which is a super weird one too, this week would have been a non-catching any positive trade, right? And then I could do this this would be for the long side, you could try it on the short side too if you really want. 1 to 5, right? Start like this. Almost any except that one would have worked, right? And that one. And then loss. Something like that, right? I mean, you can do it, and it might be profitable, but this is not the kind of market condition that I trade, nor do I try to predict every direction. So I just try to keep it really simple for myself so that I can do it long term. There we go. Hi, man. Thank you for the Webby, and thank you for everything you provide. Bless you, man. These were my numbers forward testing before joining the mentorship. I was trading after back testing the trade plan you've made available in the free insider list. After joining, I feel overwhelmed and less confident my results were pushing me towards starting small prop accounts. Does it make sense, or is it what you call trying to learn and earn? So this is only 100 trades. I think you should be forward testing or competition accounts once they're available again, for sure. But I don't think until this number has one more zero on it, or you're at like 500, should you be like learn and earning. But also, like, it's not learn and earning if your equity curve is doing this, right? Especially for 500 trades. Because now you're basically refining and earning. You can go and earn with an actual system that you have confidence in, right? If this one brings you profitability, which it seems like it's doing so far, but you need to start actualizing it, making sure it's the case, understanding how you actually interact with the live condition or how your schedule interacts with it, then yeah, you're in a really good spot. And when that number becomes around 500 to 1,000, you can consider doing like a smaller Ment funding account. But, I wouldn't waste your money on a evaluation or a funded account unless you have actual confidence behind that system, right? And it's okay that after joining you feel a bit more overwhelmed. Just keep showing up to these webinars. You know, things are going to make more sense as you go on. And the fact that you're coming here with this, right, is phenomenal. So you're going to be fine, man. You're in a good spot. Just get this number higher for sure before you actually go to that live. Look out for Men Funding and their competition accounts. So those are coming back out, and just, you know, sign up for those, because you might get a free account for all you know, just by executing a system like this, right? And keep going. And yeah, it looks really good though. So good for you. I look forward to seeing where you are like 2 months from now then, because I think this is gonna continue beautifully. Have these been recent? What have these been traded on? Since you said this is from the insider list based video, so the simple 1 to 3 ICI system, right? Where you're just protecting the overall low. That's the one, right? I think. Ugh. All right, no answer. It's all good. We'll see. You'll message me in Discord or whatever. It's all good. Thank you again. I'll see you, Maki. Thank you for being here, man. Tim Max, I'll see you as well, man. All right, guys. Listen, I'm gonna wrap this baby up, get it uploaded to everybody here. Listen, I'm also gonna get some dinner with my family as well, Dan. So good to hear that from you. All right, guys. Let's have a very good week. Keep yourselves accountable. Keep yourselves patient. Trade the action when it's clear in regards to what you're used to seeing. Don't give in to the bullshit. Let the markets that need to set up. Do not force anything. Enjoy your weeks. Spend them well. And I will see you all in the trade talks and next week. All right. Thank you all so much.